Hello future CAs. Today we're going to discuss a new question in amalgamation in our ICA study material. I know your preparations are going on in full swing. Last time we discussed a question called variety limited, and then in consolidation we discussed Chand question for consolidated P&L. It came in the exam earlier. Like that, this time I'm going to do it for amalgamation. In study material they have added a new question called in the basis of super profit method. Now this question becomes important especially if you are writing your CA inter exams in September 25 or Jan 26 exams. Sir, new question means ICA will ask. Generally if a new question comes, the examiner gets excited. If he gets excited, he will put it in the paper. So you should also get excited and learn this question. If this comes easily, it is for 14 marks. Now immediately don't comment that sir, this question already we solved in our class where I am going sir. It is not a new question. It is new question with respect to ICA study material, but this question is already there in old syllabus. Also in new syllabus, it has already been roaming in MTPs and RTP. Now it has made entry into study material and soon to your exams also. For students who are coming from foundation route, in goodwill computation, you would have done something called super profit method. That same super profit method only we are going to do it, guys, but as part of amalgamation. Where is this question added? In the latest study material, in question number 14 it is added. Instead of taking 30-40 minutes to solve the whole question, I want to quickly solve this in roughly around 20 minutes so that your time is also worth it. So I will use the solution and explain how it is done. Fairly easy question, but little bit area alone you have to focus, guys. So quickly let's go into the sum. Are you all ready, guys? We'll start off. The following information for X Limited is given as of 31st March. 4,000 equity shares, totally it is 4 lakhs. Then 10% debentures 2 lakhs, loans 80,000, trade payables 1 lakh 60, general reserve, building. If you look at all the values, trade receivables, bank, patent, share issue, expenses, it's just an extract. Just because question is not in schedule 3, you cannot be like I will also do it in T format. No, you have to do it in schedule 3 only. So far in the question, nothing is great. Balance sheet values are fairly straightforward. Let's come down. That's it. This is the paragraph with adjustments. What is the first adjustment? X is absorbing Y Limited. So X is what company? Purchasing company. And sorry, Y is what company, guys? Purchasing company, and X is going to be your selling company. Correct? Yes or no, guys? Hello. Y has agreed to absorb X Limited, or also Y will be called as transferee company and X will be transferor company. I am transferring myself to Y. Y is the purchasing or buying company. If I use the word buying company, you will get clarity. Correct? Y is buying and X is selling company. Clear till here? Nothing great over here. You should be knowing this if you are watching this. What is the following terms? Look at the terms. Y will take over all assets except bank balance and patent at their book value less 10%. That means I am not taking over all the assets. That means it's not merger, it's purchase. The minute I know that all the assets are not taken over, it becomes a purchase. So I'm taking over all assets except bank and except patent at book values less 10%. For this purpose, goodwill is to be valued at 4 years purchase of super profit. Go about to the question. Is there goodwill in the question? Not there. That means you have to compute goodwill for the purpose of amalgamation, and this is the key adjustment. Goodwill is to be valued at 4 years purchase of super profit, assuming that a normal rate of return of 8% on the combined amount of share capital in general reserve. In fact, I am doing this video and solving this sum primarily for this one super profit adjustment only. Next to what they are saying, Y is to take over trade payable set book value itself. If they don't give this also, I will take it book value. The purchase consideration, whatever I am going to compute, is to be paid in cash to the extent of 3 lakhs. Modi ji will not be happy if you pay in cash, guys, but this question is fine. 3 lakhs is cash and the balance they're giving shares at 125 rupees per share. What is the common mistake you students will be making? When shares are issued at 125 rupees per share, it is 100 rupees face value, 25 rupees premium. Now you will tell yes premium, but when you're actually passing the journal entry, I promise half of you will forget to write 2 securities premium. So I'm telling you, it's another common mistake that you should all avoid. Next, the average profit is 62,200. So what all relates to my super profit adjustment? This paragraph that I have over here and this average profit, whatever I've highlighted in light brown over here is what is related to my super profit. When I get there, I will explain it. I'm only reading the question and making you understand few basic facts. The liquidation expense 8,000, normal, just like every question. Y Limited sold prior to 31st March goods costing 60,000 to X for 80,000. Intercompany transaction. So there is a profit of how much, guys? 20,000 on sale. And now they are saying 50,000 worth of those goods are still lying in the inventory of X. That means closing stock of X Limited has some unrealized profit which I have to eliminate. Normal transaction, but we will discuss in this sum. On 31st March 2021, okay, on 31st March, trade payables of X Limited include 20k payable to Y Limited. Again, another intercompany. When I am doing the transaction entry, I will adjust this. Show what? Necessary ledger accounts to close books of X Limited. That means selling company, I have to prepare realization account and transfer all assets and liabilities and prepare the balance sheet of Y Limited post the takeover. What they are not asking is journal entries, but without journal entries, you will not get control over the sum. So it's a proper 14-mark question. How to get 0 marks in this question is to make mistake in purchase consideration. Fully you will get 0. If PC is correct, whole sum will be right. And PC is dependent on what? Super profits method. So first let me compute purchase consideration only. I hope you have understood the question till here. All of you understood here? Hello? Yes or no, guys? Okay. So now purchase consideration alone, let me go to super profits. If you are a foundation expert, sir, I studied foundation accounts very well, super profits will be like this for you. Otherwise, follow. Why will goodwill, only goodwill. So in this question, let me give you the flow of the question first. Okay. I will give the flow of question. First step, you have to compute goodwill. Because with goodwill only, you can next purchase consideration using what method? Net asset method, because in the question they are saying talking about assets taken over at what value. Once the PC is done, the next step is in the selling company's books. Which company? Selling company's books. You will prepare what account? Realization account and all the other accounts for closing the accounts over here. And then lastly you will go and prepare balance sheet in the books of buying company. Here it is Y Limited, here it is X Limited. This is the flow of the question, guys. Are you all with me? Additionally, for your control and depending upon your control, you can also pass journals in the books of Y Limited for takeover so that you get more control. This is the flow. So the whole sum depends on our friend goodwill. We have to find him carefully and correctly. I will be spending most of the time in this sum on goodwill and PC computation, because once that is done, rest of the sum is an easy cakewalk sum for you. Correct? Fine. Let's start off. What is the adjustment for goodwill? Goodwill is to be valued at 4 years purchase of super profits, assuming that the normal rate of return is 8% on the combined amount of share capital and general reserve, and they are saying average profit is 62,200. Let me tell you the logic of what is super profits. Let me take 2 biryani shops, same size, same square feet, everything same, number of staff, etc. One biryani, let it be a famous biryani. In Chennai, for example, in Chennai the famous biryani will be SS Hyderabadi biryani. Okay. Or you have Dindigal Talapakatti biryani, or if you are from watching it from some other state, let's say Lucknow biryani or whichever biryani, guys, Hyderabadi biryani, whatever. Okay. So let me just take one brand. Okay, let me take Dindigal Talapakatti, one brand is there. Next to that, for example, let's say we will have Shreya Biryani. Shreya is starting Shreya Biryani. Okay, in fact, Shreya's Biryani infrastructure is much better. She's keeping sofa and all. After eating, for sleeping also, she kept bed. Okay. Where sales will be more? The sales will be more in Dindigal Talapakatti only because that's a famous brand. For those of you who have not eaten that, it's okay, guys. Someday you will get the chance. Okay. So, this company, Dindigal Talapakatti, is earning more profits because of its goodwill. So that means I need to give more value for that. That is only super profit method. When I'm doing the numericals, let me explain more in detail. Okay. First, what they are saying, average profit is 62,200. This is the profit earned by this company. This is the actuals of this company. Are you following? I need to find out what is the super profit. Okay, or what is the profit that they should, goodwill is to be valued at 4 years purchase of super profit, assuming that the normal rate of return would be 8% of the combined amount of share capital and general reserve. Let me do what is that. I will explain once I do the numericals, guys. What is the share capital in this question? 4 lakhs. What is its combined value of share capital and general reserve? Share capital, what is general reserve? 40,000 in that 8%. So let me write that down. Equity share capital, how much? Again repeat it. 4 lakhs. General reserve 40,000 for this company. Therefore total is how much? 4 lakh 40. That means they are saying if Shreya invests 4 lakh 40, who is Shreya here? Shreya Biryani Shop. If Shreya is investing 4 lakh 40,000, the return that she can get in terms of profit will be what? In question they have given how much, guys? 8% of the combined amount of share capital and general reserve. So what is 8% of 4 lakh 40? 35,000. That means anybody starting a biryani shop like Shreya can expect a return of 35,200 if they invest 4 lakh 40,000. Clear? But Dindigal Talapakatti, or in our case, whose question is this? X, correct? So X Limited or Dindigal Talapakatti in our example actually earned the profit of 62,200. So Dindigal Talapakatti, or in our case X Limited, the company that we are going to buy, for whom we are going to pay goodwill, got how much? 62,200. That means, follow very carefully, a normal company will get 35,200, but this X Limited or Dindigal Talapakatti is getting 62,200, and that excess is because of their brand name or it's because of goodwill. So what is that excess? What is that excess, guys? 62,200 minus 35,200. How much you are getting? 20. So this is called super profits. The superpower I have of my goodwill and brand, Dindigal Talapakatti or whichever brand, excess, you are all coming to me because you find something good here. Not about class. Generally, I'm a restaurant I'm talking here. Okay. So this 27,000 is there. Now go back to the question. What they are saying? Goodwill is to be valued at 4 years purchase of super profit. So what is my super profit over here? 27,000 times 4. He is saying give a multiplication factor of 4 for super profit. How much you are getting, guys? 1,08,000 is the value of goodwill. Are you all following, guys? So let me summarize this part over here again once. Any company investing 4,40,000 will get a return of 8%, which is 35,200. But my company here, X Limited, got a profit of 62,200. So the excess super profit that they got is 62,200. What I got versus what everybody else will normally get. So I got 27,000 as super profit multiplied by 4. Why, sir, 4? Question is saying 4 years of super profit. If some other question says 3 times, multiply by 3. So goodwill is 1,08,000. Let me go and check the answer. Come down. In book they have done it so small. I have explained so much. In book average 62,200 less what everybody will get. So my super profit is 27,000. So valuation of goodwill is 1,08,000. Are you all following, guys? So we are done with this part happily. How much you will get out of 14 marks if you do this? 2 or 3 marks. Okay, maybe 2.5. Next I have to go to purchase consideration computation. After this, rest of the sum is fairly simple, guys. So for this part I will just go with the book itself. Okay, the purchase consideration, I am taking over what all assets? All assets except bank and patents at book value less 10%. That means what I have to do, follow carefully. Every single asset over here, what is it? Building, machinery, inventory, trade receivables, bank, no. Patent, no. These 4 assets I will reduce 10% for my net asset computation. So let me go to the answer. Look at this. What are the 4 assets I told you, guys? Building, machinery, inventory and trade receivables. What is the building value in question? 1,70,000. So if I do 1,70,000 minus 10%, you get 1,53,000. Are you following? Go for machinery. What is the value of machinery in question? 3,20,000. So I will take 3,20,000 minus 10%, minus 32,000. Are you getting 2,88,000? Yes. Similar computation for inventory, similar for trade receivables. Are you all with me, guys? What is the common mistake we will all do? After finding goodwill correctly, you will forget to add goodwill. Okay, we have to add goodwill. Just now one student is realizing I forgot goodwill. We are computing goodwill to include in our purchase consideration. So I will add goodwill. I will find my total assets. Are you following, guys? In regular class, I will write all of this, guys. I want to quickly solve this for you. So I am doing it this way. So we have a doubt from student over here. Sir, should I also minus 10% for goodwill? I already found goodwill at 1,08,000. Should I minus 10%? Very simple. The question says what? All the assets except these two are less than 10%. And goodwill is separately valued. So the 10% less will not come for goodwill. Okay. What is, look at the liabilities in the question. We have only two liabilities. Loan and trade payables. And what they have clearly given, take over trade payables at book value 1,60,000. So come over here. I will reduce trade payables 1,60,000. Sir, why am I not reducing loan? They have not told about loan. Since they have explicitly said trade payables is taken over at book value, I am taking only that. So I will reduce trade payables. I am getting net assets how much, guys? 6,05,000. This only is my PC. Now what is the question saying? This PC will be paid 3 lakhs in cash and balance in shares of 125 each. So let me compute that separately. What is the amount of PC, guys? 6,05,000, correct? So this 6,05,000 I will split into 2. How much is cash? 3 lakh will be my cash. Balance 3,05,000 divided by 125. How many shares? 3,05,000 divided by 125. Divide quickly and tell me, guys. 2,000. Round number or decimal? YouTube students also are watching. Use your calcs. So 240 into 100 will be my face value. 2440 into 25 will be securities premium. This will be face value. When you are doing this breakup itself in the working note itself, please do this breakup like this. Otherwise, if you write here, if you write over here 2,440 into 125, later you will forget securities premium. So while writing in working itself, split and write it. Are you following, guys? That's what will be there over here. Look at this. PC, how many shares? 2,440 number of shares. Are you following, guys? That's it. Now we will, with this, if I go to the adjustments, what all adjustment is done, sir? First, the takeover of all assets is done. Trade payables at book value is done. PC settlement and the point 1, 2, 3, the important ones is done. Correct? After this, what is there? Liquidation expense. It will come in my realization account. And then this is the one more adjustment. Unrealized profit. Let me finish off the unrealized profit also. After that, it's only closing of accounts. Now, unrealized profit, if I have to quickly do it, follow. Why sold to X, correct? That's what they gave. Let me just check again once. Yeah, Y sold to X something which is worth 60,000 for 80,000 and made a profit of 20,000. And in that 80,000, how much is there in the closing stock, guys? They have given clear in the question. 50,000 is there in the closing stock. Okay. How to find the unrealized profit? Very simple. Cross multiplication. Or let me apply a percentage itself. No. In 80,000, profit is how much? 20,000. So 20,000 divided by 80,000 into 100. How much? 25%. That means the profit is 25% on closing stock. That means in this 50,000 into 25% is how much? 12,000? 12,500 is going to be my unrealized profit. I will again repeat this adjustment. I sold 60,000 for 80,000. So my profit is 20. So in my closing stock of X in 80,000, the profit is 20,000. Therefore, 20,000 divided by 80,000 into 100, 25% is the profit sitting in my closings in the stock. So out of 50,000, which is now there, out of 80, 30 is already sold. How much stock is left with me? 50,000. In that, apply the same percentage. You will get how much? 12,500. So I will go here and check how much, guys. Look at this. 12,500 is the unrealized profit. Are you following, guys? Clear? Understood? This is the stock. Is the adjustment over here? Not yet. Now another very, very important mistake that we will be doing is we will proceed with the sum at 12,500. But follow very carefully. What is the value of inventory in the question? 1,10,000. Correct? 1,10,000 is the value of inventory, guys. So look at this. In the 1,10,000 inventory, 50k is there. A part of the 1,10,000 only is 50,000. Correct? All of you with me, guys? Now, this 1,10,000 when I transferred above, you transferred at less than 10%. That means, now when I am transferring at minus 10%, this 50,000 also would have not been 50,000, would have been 10% less. So how much is 10% of 50,000? 5,000. Are you following, guys? That means my inventory also of that part is only how much? 45,000. What is 45,000 into 25%? 11,250. Immediately what you will do? You will take 11,250 as the unrealized profit. Are you following, guys? But let me explain the solution over here. Okay. Follow. What I did now was I took 50,000 over here. Let me already wrote, no? 50,000. See. What I did is, everybody understood 12,500. Now I'm trying to explain why 12,500 is not correct, because my actual inventory is 1,10,000, and when I took over my inventory, I took over at less than 10%. That means I took over only at 99,000. So this 1,10,000 only includes this 50,000, correct? So what I will immediately do, I will assume that 50,000 also, I will reduce 5,000. You will find 45,000 and multiply by 25%, and you will find revised unrealized stock at 11,250. That's what we will usually do, but that is not correct. Are you understanding till this part how 12,500 came? Are you understanding that students will mostly do 11,250? Now let me explain why that is not fully correct. Follow, guys. What we did was we reduced this 11,000. We found 11,250 is not correct. First, let me explain why 11,250 is not correct. What is the actual closing stock? 50,000, correct? In which there is profit. That means the profit percentage of how much? 25% should be applied only on 50,000, and it should not be applied on 45,000 like we did here. Because the profit is sitting in 50,000 and not 45,000. Correct? Are you understanding, guys? The profit margin, see, this 50,000 only includes profit. 45,000 is after reducing this 10%, but we should not do it there. The profit, what is the unrealized profit? 50k into 25%, you are getting how much? 12,500 is the amount of unrealized profit or the actual unrealized profit. If you apply 25% on 11th 45,000, what you are doing is you are showing the profit as less. Why this 10% reduction is happening? This 10% reduction is happening for the purpose of amalgamation takeover. It's not reduction in profit. Profit is still 12,500. Only the takeover value is dropping. Are you following up? Now, in the takeover value, totally 1,10,000 inventory. Let me split as 2. 60,000, keep it as others, in which there is no profit. Correct? Keep the rest, keep the others. 50,000, in which there is profit. That profit only we found 12,500. Now, the 10% is how much? 11,000. 10% is 11,000. Anyway, this 6,000 will reduce. So, this 60 will reduce by how much? 6,000. Correct? It will become 54. Correct? This 50 also will reduce by how much? 5. It will become how much? So, if I reduce both, this 60 minus 6 will be how much, guys? 54. This 50 minus 5 will be how much? 45. Add both. How much you are getting? 99,000. This 99,000 only I am anyway taking over here. Can you see it? That means that at the time of takeover itself, I am taking over only 99,000. Now, follow very carefully. That means I have anyway reduced 5,000 for the purpose of net asset. So, that 5,000, if I reduce off from unrealized profit itself, follow very carefully, guys. Anyway, what is the goal of unrealized profit? From 50,000, you are going to reduce 12,500 and make it 37,500 as the revised inventory. So, what I am saying, this 12,500 you split as 2. 5,000 is reduced for the purpose of amalgamation. Therefore, I will tell balance 7,500 is what? Unrealized profit. Are you getting it, guys? Are you anyway I have to reduce 12,500 from inventory and show it as 37,500. But instead of calling the entire 12,500 as unrealized profit, for the purpose of amalgamation, I am anyway reducing how much? 5,000. So I will reduce that 5,000 and reduce 7,500 as unrealized profit. And then I am showing you what, guys? 37,500. Basically, I am splitting it. What I am saying, actual, technically, I am again repeating one last time. Technically, unrealized profit is 12,500. But because for amalgamation purpose, we reduced 5,000, I am anyway reducing that and balance what is still to be reduced, 7,500. Are you understanding? Or let me show you in a different way. 50,000 is my asset. I am supposed to reduce how much? Correct? How much I already reduced for amalgamation? So how much is there? So in this already 5,000 is reduced now. So how much is to be reduced now? So now you reduce only 7,500. So it becomes 37,500. Are you getting it? Are you all following, guys? Surely understanding? Again I will repeat one last time. I can see your faces are not clear. So I am repeating. I am supposed to reduce 12,500 as unrealized profit. But since for amalgamation I already reduced 5,000, I am only reducing the excess of 7,500. Can I believe you all understood? Yes, that's what we are doing over here. So we are reducing amount of unrealized profit as 7,500 and come back to the question. Now all the adjustments below are sorted. We just have to do realization and balance sheet. Now the doubt of the student is, sir, why am I merging this 5,000 and this 12,500? Why can't I keep it separately? I will again repeat. I am supposed to reduce only 12,500. But Because of amalgamation, I already reduced 5,000 in this inventory. I already reduced this. Now, after reducing 5,000, if you still reduce 12,500, you are reducing 5,000 two times. It becomes double reduction. That's why I'm reducing only 7,500. Following? That's it. With this, all the adjustments, like I said, are done. Now, straight away, we will go and run through the sum. I don't want to spend more time now in doing all of this. Realization account. First is what? I have to prepare in the books of selling company. Correct? So, in selling company, I have to transfer what, guys? All the assets and liabilities at book value, except the ones which are not taken over. So, which is not taken over here? Bank and patent. So, except bank and patent, I am going to transfer every asset and liability, including loan. Now, again, don't get confused. We are doing in selling company books. In selling company books, the goal of this should become 0. So, look at this. 80,000 is transferred over here. Okay, they are keeping loan as separately. We can transfer here. Okay, what we will do in this method itself. Another method I do is I transfer everything to realization account. But here, let me transfer only those assets and liabilities which are taken over. What are the ones taken over? Except these three, everything is taken over. So, trade payables 1,60,000. You can see by trade payables 1,60,000. Then machinery 1,70,000, 3,20,000, 1,10,000, 1,30,000. Can you see all those values here, guys? Are you following? Okay. Now, what is the amount of purchase consideration that we already found? 6 lakh. So, come down over here. This is normal. So, look at this. 6,05,000 split in which account? The shareholders account. Equity shares account. Equity shares is 3,05,000. Look at shareholders account. In question, shareholders is how much, guys? See, after this, I am not doing the sum in detail. These are the three adjustments which I discussed. After this are regular adjustments that you know. So, I am just going to do mind mapping in the answer. First is we prepare realization account and we transferred everything over here. I am putting in green. Correct? Next, equity shareholders account. I am transferring the share capital of 4 lakh and reserve of 40,000. So, 4 lakh and 40,000. Are you following, guys? Then what is still there? Debentures is there. For debentures, is there any adjustment here? No. Debentures, I will open a separate account then. Debentures, opening balance how much? 2 lakhs. Done, guys. So, whatever I put as green, I have already transferred now. Correct? What other company is taking? Realization account. Others is coming into which one? Separate accounts. Now, bank is how much? 68,000. So, I will have a separate account for bank. Where is the bank account? Yeah, bank account opening is how much? 68,000. Now, other company paid me PC. In that, how much is cash? 3 lakhs. So, that 3 lakhs also is coming over here. Clear, guys? Now, I have to settle the debentures myself. So, I am paying debentures 2 lakhs, paying debentures 2 lakhs, settled in selling company. Are you following, guys? Debenture account is closed. Loan, is other company taking over? No, I should only pay. So, loan account also I am opening separately. Let me write for loan also now. And loan also is settled with 80,000. Bank loan also is paid. Are you following, guys? Next, in the question, they have given some liquidation expense amounted to 8,000. So, I will come here, write down liquidation expenses how much? 8,000. Are you following, guys? Any other expenses there apart from that? Yeah, no, that's it. 8,000. It's done, guys. So, I am putting that 8,000 in bank. Are you all following? Clear? Now, with this, bank account is fully used. I had opening balance of 68,000. I got from a buying company 3 lakhs. I paid realization expense, debentures and loan. How much is left still closing balance? Based on this, my closing balance is 80,000. That will go to my shareholders account. So, go to shareholders account. I am paying them how much? Where is that 80? By equity shareholders, where are they? Where is it, guys? Yeah, to bank, sorry. To bank, 80,000. I have paid them. Is it clear till here, guys? Now, go to my question. Go to my question and ask yourself, is every item in the balance sheet properly settled? Equity shares paid up. Debentures transferred, loan settled. All these I transferred in the starting itself. Bank also I transferred. Still this patent and share issue is met. Patent nobody is going to buy. So I have to write off the patent. So how to write off the patent? Entry will be realization account debit to patent. It's an expense for me. Instead of debiting P&L, I'm debiting realization account. So I will go back above over here and I'm writing what, guys? To patent. It is done. Now come back to the question. Come here. Patent also is taken. What is still left? Share issue expenses. This share issue expense is also a loss, but this loss should be borne by the shareholders because it's share issue expense. One option you can do is you can transfer that also to this account only. The impact will be same. If you transfer over here, anyway that loss will be transferred where? To equity shareholders account. But what they are doing, instead of realization, they are directly transferring share issue expense over here. Shareholders will bear the loss. Are you following, guys? Now we will close all the accounts. Realization account, debit, everything is done. Okay. To bank, that expense also we paid off. Are you following, guys? Which expense is that? The bank account by 8,000. Here to 8,000. Are you following? PC is how much? 6 lakh 5,000. That means the meaning of this logically is, hey guys, I got 6 lakh 5,000 for taking over all these assets and taking this trade liability, but still I had to write off a loss of 65,000 of patent and I had to pay expense of 8,000, and because of this additional patent and expense for me, my shareholders loss is 38,000. This 38,000 will be transferred to shareholders. Here realization 38,000. Are you following, guys? And then they are also taking their shares 3 lakh 5,000. It is fully settled. Are you following, guys? That means effectively shareholders are having a loss of 38,000. Are you following, guys? Clear? Again, if I solve this by myself writing, it will take another 30 minutes more. I am just running you to the solution because this is typical like in every other sum. Correct? Are you following, guys? There are many ways to solve this over here in selling company. I am solving as per ICA, but usually how I do it is I transfer everything to realization account and settle it there itself. We can do it that way also. Now last, come to the balance sheet of this new company. Very simple. Let me prepare the balance sheet in the question itself over here so that we can save time. You need to be very active now. Okay. Equity shares is existing 4 lakhs. Now how many shares newly I issued? Starting itself I found here 2440 into 10. How much? 2440 into 10 is how much, guys? How much? 2 lakh 44,000. If you add both of this, how much you are getting? 6 lakh. Come down to balance sheet. Share capital. Oh, this is, oh, they are asking balance sheet of Y Limited only. Fine. Okay. So we are not, okay. This is X Limited, correct? So this only we closed. So this is another common mistake that everyone does where they add both of this. Generally, what we will do is they will give us two balance sheets, correct? Then we will add it. Since that is not there over here, don't add it to X Limited, guys. This is another common mistake that everyone does. So straight away we will go to balance sheet of X Limited only. I will do breakup of everything. So share capital is how much? 2 lakh 44,000. So that's what we have over here. How much, guys? 2 lakh 44,000. Reserves and surplus is nothing but my securities premium. 2440 into 25. How much? 2440 into 25. How much? 61,000. If I come here, we are getting 53,500. I will just show the breakup over here because of unrealized profit. Are you following, guys? So look at this. The profit is 61,000 only, SP only. Unrealized profit you have to reduce. Reduce that, you will get 53,500. Are you following, guys? Then rest of the sum is simple. Trade payables, copy paste. Book value. Liability side is done. Bank overdraft, 3 lakhs. Why 3 lakhs is coming bank overdraft? Why? We will come to that. Come to property, plant and equipment. What is the asset taken over? Come to note number 4. Buildings and machinery. Copy paste from my takeover entry. Correct? Then intangible asset, goodwill 1,08,000. Inventory 91,000. Houser 91,000. We took at 99,000. Huh? Minus 7,500 for what? Unrealized profit. Therefore, you get how much, guys? 91,000. Trade receivables 97,000. Houser 97,000. In takeover itself, we did like that. Correct? 10%. We reduced 1 lakh. Oh, intercompany is there. Sorry, 1,17,000. So one more small thing. From 1,17,000. In the question, they have given what, guys? Intercompany how much? 20. So both liability and asset side I will reduce 20,000. So minus 20,000. How much you are getting? 97,000. That's why I said at this point, if you pass journal entries, it becomes easy. Okay. If you are good, you can do without that. So let me summarize all the assets, guys. PPE is copy paste from the PC method. Intangibles, goodwill, inventory 99 you got in PC minus 7,500 for unrealized. Trade receivables you got 1,17,000 in PC. Now intercompany you minus 20. That means trade payables also we should have reduced. Correct? See, trade payables is 1,60,000. They are taking over at 1,60,000. Therefore, that trade payables only we are doing 1,60,000 minus 20,000. We are getting 1,40,000. Are you following? We wrote everything. Now, asset side balance sheet is totally 7,37,000. Liability side it is not tallying, and the difference is how much, guys? To the extent of 3 lakhs. And look at this. In the absence of particulars of assets and liabilities other than those of X, the complete balance sheet after takeover cannot be prepared. One last question I want you guys to tell me. With that, we will end this sum. This 3 lakhs is balancing figure or is there any logic? If you look at the whole question, guys, after thinking, we don't have a reasonable justification for taking 3 lakhs here. Balance sheet is not tallying, and since the company, since I don't have any information, the question says purchase consideration. I have paid cash to the extent of 3 lakhs, and here also difference is 3 lakhs. So we are taking it as bank overdraft because I cannot create another liability in the book. That's why they are saying full information is not there. So with the available information, balance sheet not tallying for 3 lakhs. So I will take it as bank OD. Are you all following, guys? Understood the whole question now? So again, with this, the new sum super profit method is done. For us to solve itself, it took 42 minutes because I'm explaining every item. But in exam, you should be doing this in 20-30 minutes. If any of the students have watched the video till here and then you are in the end of the video, let me know in the comments, guys, if you have understood the whole question. How is this question and do you think it will come in the exams? That's about it, guys. All the very best for the exams. Take care. See you on another day.